Welcome back to the channel. Today we're breaking down one of the most dramatic geopolitical events of 2026. The US military intervention in Venezuela, the capture of Nicolás Maduro, and how global markets reacted with Dow, S&P 500, and Nasdaq futures holding steady despite the geopolitical shockwaves. Make sure you watch till the end because we'll also talk about oil markets, investor sentiment, and what this could mean for your portfolio going forward. Also, don't forget to hit that subscribe button and ring the bell so you never miss a market update. Over this past weekend, US forces launched a surprise military operation in Caracas, resulting in the capture of Venezuela's President Nicolás Maduro and his wife. The mission was ordered by President Donald Trump, and the Venezuelan leader was flown to New York to face federal charges, including alleged narcotics-related offenses. This marks one of the most direct U.S. interventions in Latin America since 1989, when the U.S. ousted Panama's Manuel Noriega. U.S. officials have stated the goal is to oversee a transition in Venezuela and potentially open up the nation's vast oil reserves to international markets. Now let's talk about how investors and the markets are responding. Despite the geopolitical tension, U.S. stock futures were largely steady in pre-market trading after the news broke. The Dow Jones S&P 500 and Nasdaq futures saw limited reaction, signaling that financial markets were digesting the news without panicking. Investors and economists have pointed out that while geopolitical events often cause short-term volatility, the long-term impact on equities is usually dependent on broader economic data and earnings expectations, not just headline risk. In other words, markets can handle headline shocks if economic fundamentals remain sound. Now let's talk oil, because Venezuela has some of the largest proven crude reserves in the world. After the operation, Brent crude prices wavered, initially dipping, then strengthening slightly as traders tried to gauge future supply prospects. Even though Venezuela currently produces a small fraction of global oil, any long-term change in its ability to export oil could have implications for global energy markets, especially if the US or international companies ramp up investment. Oil traders in particular are watching closely because shifts in Venezuelan production could influence prices for months or even years. The world's reaction to the US move has been mixed and intense. Many Latin American leaders condemned the capture of Maduro as a breach of sovereignty, while some right-wing governments praised the action. There's also concern about how this event could impact U.S. relations with other global powers like China and Iran, both of which have ties to Venezuela. From an investment perspective, geopolitical risk can create short-term volatility, but markets often adjust quickly as traders refocus on earnings, interest rates, and other economic indicators. So what should investors take away from all of this? Here are 3 key points. 1. Don't overreact to headline risk. Markets can remain surprisingly calm, even amid geopolitical upheaval. 2. Oil and energy sectors may see longer-term implications, both positive and negative, depending on how Venezuela's oil production evolves. 3. Diversification matters. Geopolitical surprises are unpredictable, but a diversified portfolio can help smooth out short-term volatility. If you found this breakdown helpful, let me know by leaving a comment below. What do you think will happen next with markets and oil prices after this dramatic intervention? Don't forget to subscribe for daily market updates and financial insights. Hit that like button if you learned something new today, and share this video with a friend who's watching the markets too. Thanks for watching, stay informed, stay ahead, and I'll see you in the next update.